Hey everybody, it's Cody Kessler with today's episode of KLA Now, coming to you live from the Rockville office of Kessler Lending Advisors, Division of Homebridge Financial Services. Today's topic is the hidden costs of getting a mortgage. To be honest with you, there's a lot of people that have no idea what the actual fees or costs that go into getting a mortgage. This is proven by the fact that mortgage companies are the ones responsible for putting out the worksheets, the LEs, which is the loan estimate, which details all of the closing costs for borrowers. A lot of the times, though, there are some hidden costs that go into that sometimes not even the lender is telling the borrowers about. So the Fed rules, which is now TRID, which is the Truth in Lending and the RESPA Integrated Disclosures Rule that came out in October of last year, that's kind of put to bed a lot of the ability of lenders to change things, add last minute fees, right before closing, and a borrower would not be able to actually have time to look at those things. So, the fact that lenders are taking advantage of that has been greatly reduced through that. So, kudos to the CFPB and their rules there. Some of the CFPB has not been very useful in our industry, other than very minor things such as that. But the 5 things that I want to go over today. The first one is discount points. There's a lot of people that don't know what a discount point is, and some lenders actually expect the client to understand what that is, and what they're doing is they're charging you for a lower than market rate. The borrower actually thinks that is a customary fee. It's put out there, the borrower says, yep, no, that's what you have to pay to get this fee, and it's the same thing as an origination charge or an origination fee, or otherwise known as a point. It's just masked as a discount point. So that's a pretty basic one, but it is one that a lot of people have questions on. The second one, and this is more prevalent in Montgomery County, Maryland, because of how the taxes are paid, as opposed to Virginia or DC. But a really big topic that comes up, and it always comes up right before closing, is escrows and how much the seller is going to be reimbursed for prepaid taxes. So think about this. If it's December 31st, the seller of that home is going to prepay taxes from January 1st all the way through the end of June. But if you close halfway through the first 6 months, you've actually got to reimburse the seller for 3 months that they prepaid for that they haven't lived in that property. The lender is not required to tell you about this because it's not part of the closing costs. It actually ends up going on page 1 as a reimbursement. So surprise, a couple days before closing, you get your closing disclosure, and you find out that you owe, $1,500 if it's $500 a month in taxes, 3 months back to the seller. So that would be a hidden fee that all of a sudden you're going to be responsible for taking care of that the lender should have told you about a long time ago. Here are 2 things that a lot of people miss. They're not exactly associated with the mortgage, but they certainly are associated with buying a home and going through the mortgage process. So first, a lot of clients don't understand about a realtor admin fee. It's going to be on the vast majority of loans because most brokerages are actually charging this fee. So in admin, they do the paperwork, they go through and do all these things, and this is actually one of the main ways that a brokerage, a real estate brokerage, makes money. So these fees can be anywhere from $400 to $500. And a lot of realtors don't actually disclose that to their clients until the mortgage company and everybody's doing the CD, again, a couple days before closing. So a good time to ask your realtor about it would be when you're signing that buyer's agreement, or actually when you're signing the contract, what's the realtor admin fee that I should be expecting to pay? Home inspection fees. Most buyers are getting a home inspection. And so for some reason, they don't even think about the cost of what that home inspection could be. They can be rather expensive, especially if you're getting a good home inspection, which is going to be really detailed. It could be $500 to $750 that you're not accounting for because the lender hasn't told you about it. They're not required to because it's not required for the loan, but it certainly is something that you need to be aware of because you're going to be paying for a home inspection most likely when you buy a house. Here's the last one, and this is an intangible one. This is what most people actually have a propensity to not think about at all. And in my opinion, it's the most important one because it's the most valuable one and can equate to the most money. Time. How much time are you actually spending as you go through the process, and what value are you putting on that time? I'll give you a great example. So a lot of people call up and they want to go through that quick and easy pre-approval process, and they'll do a lot of things like just simply say, hey, give me some numbers as quickly as you can. Tell me that I'm okay as quickly as you can. So off you go. And you've certainly saved some time on the front end. But how much time and stress and energy are you going to put into getting your mortgage to close on time when things pop up later on, such as tax returns? We might look at your business tax returns, and this actually is very prevalent with self-employed borrowers, not so much with simplistic, W-2 salaried borrowers. But the more complex the file, the more that these things are going to come up afterwards. So don't forget to allocate a value to your time and how much you're going to have to take away from work, because every hour that you miss from work, that's money that you're not making. So guys, those are some of the 5, in my opinion, hidden costs of getting a mortgage that you definitely need to be made aware of. Your lenders should certainly be making you aware of all 5 of these topics as they're going through their pre-qual or any part of the transaction. And certainly, again, if you have a good realtor that's representing you, which there are many out there, they'll be talking to you about all these things as well. So if anybody has any questions, please let us know. I don't know if we had any come through. Great. Okay. What are red flags to look for in a mortgage company? Okay. As I said, anybody that's really doing this quick and easy on the front end, they're not approaching this with your best interests at heart. They're looking at it from how quickly can they get you into their mousetrap, so to speak. Things like Rocket Mortgage from Quicken Loans. Somebody that is enticing you based upon a time frame. Save time by coming into this process, using your phone to send documents. It's going to end up causing a lot of problems on the back end. So anything that is being touted as quick or easy is probably not the best way to go, in my opinion. We have another question. What is the most shocking thing you've ever seen a mortgage company attempt to do? I don't even know if we have time for me to answer all of those. I would just say, listen, the mortgage industry has a bad reputation for a reason. In my opinion, it's a very well-earned reputation. There are companies out there that do it the right way, that work pretty hard to make sure that things are in the client's best interest. But I would tell you definitively, you need to learn how to protect yourself. You shouldn't be relying upon a real estate agent to protect you solely. You certainly shouldn't be relying upon a mortgage company to protect you solely. The reason being is they make money only when you buy a house. So remember that conflict of interest. And be aware and just make sure that you're educating yourself on how to make sure that you are the one that is getting the actions in your best interest and nobody else. So more today. Okay, this will be the last one that we do. What fees do sketchy mortgage companies attempt to sneak in? Well, like I said, I started this with the CFPB has done away with the ability for mortgage companies to really sneak in fees at the last minute because of TRID, and the fact that even if you do get to closing, you have to receive your closing disclosure at least 4 days prior to your closing. So you've got plenty of time to review it, and you also have to accept it. But as a mortgage company discloses to you in the beginning, they are bound by those terms. So it's really those initial disclosures where a lot of consumers think that they are now bound to doing business with that mortgage company. That's not exactly the case. Those disclosures are there to actually protect you, to make sure that the mortgage company doesn't change anything from that point in time. So whatever you sign from those disclosures, that's actually, if they never give you anything that supersedes that, that's what your loan will look like when it closes. So it makes it actually very difficult, rightfully so, for a mortgage company to slip in any fees. So, I think that has pretty much been done away with for the most part. So hopefully that's a good answer there. So that is all the time that we have for today. I want to thank everybody for watching. Hopefully you found this, as always, useful information. We thank everybody that sent in those questions, and we look forward to catching you next time on KLA Now. So have a great day.